Good morning or good afternoon, and thank you for attending our Ask the Expert call. Today's topic is how to expand globally and avoid these common HR challenges. Our speakers today are Stuart Buglas, Director HR Advisory at Crow UK, and Steve Wares, Vice President Business Development, CCW Business Solutions. My name is Angela Tyson. I'm the Regional Director and National Membership Chair for the CFO Leadership Council, and I just want to do a little bit of housekeeping before we actually get started. You may have noticed your lines are muted, and that's so that there are no distractions while our speakers are talking. However, we certainly encourage your questions and comments, so please feel free to use the questions area to communicate. We welcome your interaction, and we really want to make sure that your needs are addressed, so please feel free to do so throughout the presentation. I'll be monitoring that area, and I will interrupt our speakers as I see your questions or comments come through. If you are a member of the CFO Leadership Council, you will receive one CPE for today's webcast. In order to receive CPE, you must be a member and answer 3 of the 4 polling questions. So I'll interrupt the presentation in order to bring those to you. If you're wondering how to become a member of the CFOLC, you can get in touch with either me after the webcast or Kristen Todd. We do have 2 levels of involvement that might interest you. The good news is, if you join today, you qualify for CPE. There will be a survey that follows the presentation. NASBA requires that we send a follow-up survey to you immediately following the presentation. So please really give us your feedback. It really helps us to ensure that we're delivering the right information to you. So that's really it for the housekeeping, and now I'd like to present our speakers. Stuart Buglas, again, Director HR Advisory at Crow UK. For over 20 years, Stuart has operated as a leading international HR consultant and the go-to contact for multinationals with global HR requirements. Qualified in both law and HR, his range of expertise includes labor law, immigration, data privacy, reward, benefits, and Social Security. And Steve Wares, Vice President Business Development at CCW Business Solutions, has more than 20 years experience helping US-based technology companies with their international expansion activities, including everything from legal entity setup through accounting, tax, compliance, payroll, and HR. His primary role is to help companies understand their options for setting up and operating globally and how to achieve their objectives efficiently and effectively. So I just want to say thank you to both of you today for sharing your expertise with our audience. I'm going to hand it off to both of you, and I do believe that, Steve, you're starting.
That is correct. Thank you very much indeed. Good morning, good afternoon, everyone. Thank you for joining us today. My name is Stephen Wares, and I am the VP of Business Development with CCW Business Solutions, and I'm joined today by UK-based colleague Stuart Buglas, who heads up our Global Business Solutions HR team. And in attendance also from Crow is my Colorado-based colleague, Emily Bryson, who may already be familiar to some of you on today's webinar. Thank you to Kate, Kristen, and Angela at the CFO Leadership Group for hosting us here today and for all the work that they have done to enable us to present to you all. I'm going to be asking the team at the Leadership Group here to advance the slide. So if we can go to the next slide, please. So CCW Business Solutions is the US subsidiary of Crow UK, part of Crow Global, the world's 8th largest audit, tax and advisory firm, with about 30,000 partners and staff in about 650 offices around the world. And for the last 20 years, Stuart and myself have worked exclusively with US-based technology companies, helping them expand their operations globally, delivering centralized entity setup, payroll, accounting, tax, compliance, and HR services out of Crow's service center located in the UK. And our centralized team creates efficiencies and cost savings to companies seeking to expand quickly into multiple countries around the world. Next slide. I'm sure many of you recognize the character on this slide, but I've never seen an episode of Columbo. I have, however, heard that he would disarm his suspects with the same catchphrase that many VPs of international sales use to casually let their HR team know that they've made a new hire in a new country. Now, this throwaway comment has massive ramifications, as we will see in the subsequent slides. Next slide, please. The key to getting things right from the get-go is to make sure that the three primary stakeholders are involved: HR, CFO, and legal. Increasingly, we see CFO taking responsibility for the HR function. And as a result, the main focus of our presentation today will be the key HR issues that need to be addressed. However, it is important to note that each party is going to need to be involved in the process. Next slide. So from an HR standpoint, and Stuart will elaborate on these in more detail later, but we will need to think about issues around who's actually going to employ the individual or the individuals overseas. What sort of employment documentation do I need to have? Do I need an offer letter, an employment contract? What about stock options? Can we grant these to international employees? And what do we need to do in order to do that? What about employment benefits? Obviously, here in the United States, employment benefits are a key component of employee remuneration, but that may or may not be the case in the countries into which you plan to expand. How are employees going to be paid? How does payroll work? Is it weekly, bi-monthly, monthly? It does vary from country to country. And of course, in some countries, you get paid 13th and 14th month salaries. So it can vary dramatically around the world. And what about expats? If we're sending someone from the United States into a foreign country for an extended period of time, what are the issues that we need to deal with when it comes to immigration, when it comes to the fact that a US citizen is going to be taxed on their worldwide income, and yet the host country is also going to tax them on the basis of time spent in country? How are we going to stay compliant? And of course, the question that everyone should start at the outset, which is what happens when we decide to terminate these international employees? Next slide, please.
And Steve, before you get on to that next slide, yes, and you're asking the questions, I figured maybe I should just put out one of the polling questions right now to get one out of the way for our audience. Is that okay?
Sure. Absolutely.
Thank you so much. I appreciate it. So we'll just put it out there and see how much they know. The question is, what is the most pragmatic and cost-effective way to enter a new market? Subsidiary, branch, rep office, PEO, contractor. It'll be interesting to see what our audience knows. And I just give them another couple of seconds. And audience, I'll just ask you so that we can make sure that we get through the hour with all of the information that our speakers want to give to you. If you can quickly answer, that would be really helpful to all of us. Just another second, gentlemen, and I will close the poll and let you know what they say. Okay. So very quickly, it looks like 13% said subsidiary, 9% branch, 19% rep office, 15% PEO, 44% said contractor.
Excellent. That's fantastic. Thank you very much, and thank you everyone for answering. The answer actually doesn't surprise me at all, and we will certainly take a look at each of those options in the upcoming slides. So thank you for that. Now, obviously, a very brief summary here of some of the key considerations that CFO and legal might be considering. Obviously, there's taxation issues, whether it's corporate tax, withholding tax, VAT tax, sales tax, and the extent to which these come into play depend on a variety of factors. Invoicing foreign customers. How do you get your money back from overseas? Dealing with multiple currencies, staying compliant, and understanding your risks are all going to be elements that the CFO and legal counsel are going to want to get their arms around very early on. And if we can go to the next slide, I'm going to focus on the issues around getting new hires made and avoiding making mistakes as you expand internationally. But obviously this all starts from making the key decision here, which is who is going to hire the international employees. So right on with that polling question here, who will be the employer of record, so to speak, for these employees that we're hiring around the world. I'm going to take each one of these in turn. So the representative office, which is also known as a liaison office or a non-resident employer, or in some countries as a payroll-only registration, can often be an ideal vehicle for market entry, for data gathering, and other non-commercial operations on the basis that it is typically a low-cost option with a limited scope of allowable activities. And of course, sales activity is typically expressly prohibited. And I think that often that gray area is defined as being there should be no power to conclude sales contract. Otherwise, the rep office scope is broken and tax nexus could be assessed. But of course, a rep office is an extension of the parent company, and as a result, any trading and employment risks would flow directly back to the parent company. So in the event of a tax nexus scenario where local tax authorities have deemed the activities to be beyond the allowable scope and therefore to have now crept into the realm of being subject to local tax, that would be a liability that would attach itself to the parent company. Likewise, if you terminated an employee without following the rules and found that they, at no cost to themselves, put you through an employment tribunal, any damages awarded, any compensation that they were due would indeed attach itself to the parent company. However, registering a representative office is typically quite quick, with registration requirements ranging from a simple notification to the tax authorities to obtain an EIN number within a matter of days, all the way through to maybe a more involved process associated with establishing a rep office in China, where it might take 2 to 3 months to complete all of the appropriate steps. In some countries, such as Hong Kong or Singapore, you're required to obtain a license, which is renewable every year. But typically, this type of registration can continue to operate until such time as you either create a degree of permanency to your presence, such as leasing an office in Germany, or your activities develop beyond the allowable scope of activities, such as providing on-site warranty repair work, or perhaps your headcount grows beyond what might reasonably be deemed to be preparatory. So aside from being quick and low cost to set up, the fact that you're not required to maintain accounting books or tax records for a rep office also make it a very light touch from an administrative standpoint, with payroll and HR related compliance being the only requirement. Now, it is true that many companies graduate from a rep office to either a branch or a subsidiary once they've determined that the market and the resources exist for them in that foreign country to achieve their business objectives. Now, one point to note from an HR perspective is that a rep office cannot typically hire non-locals. In other words, it's not able to sponsor a visa or a work permit application. And as a result, if the first hire in a new country is going to be an expat, you will need to explore sole rep visa options or establish a subsidiary and obtain a license to sponsor a visa, which of course can be time consuming and add to the cost. Next up the ladder would be a branch, which is somewhat similar to the rep office insofar as it is an extension of the parent company, but it does represent a permanent establishment or a tax nexus of the parent company in the foreign country. And as a result, the activities which can be performed by the foreign branch are typically limited to the main activities of the parent company. Now, income generated as a result of the activities of the branch are usually subject to local corporate income tax, and losses incurred by the branch can usually be offset against profits in the parent company. Now, as I mentioned, the branch is an extension of the parent company, similar to the rep office, with all trading and employment risks flowing back to the parent company. And we typically only see branches used by our clients if they form a part of a wider tax strategy, incorporating a variety of regional profit centers with branch offices in multiple countries. Now, despite plenty of publications and perhaps even my slide here suggesting that a branch is cheaper and easier to set up than a subsidiary, in practice, we often see that a branch can take longer to set up than a subsidiary due to the need for parent company documentation to be translated into local language, notarized and apostilled, which of course adds time and in turn adds cost. One additional reason we don't see too many US privately held companies establish operations overseas through branch offices is the requirement in many countries for the branch to not only file accounts reporting the branch activity, but also returns disclosing the financial statements of the parent company, which once filed are available for public inspection. Now, you may not want your customers or competitors having this level of visibility into your financial position while you're still in rapid growth mode as a privately held company. And as a result, that it can often be a deciding factor in a company deciding against setting up a branch. Next slide, please. Without doubt, the subsidiary is the most common method for a company to set up a business presence in a foreign country. While we are certainly fans of putting the horse before the cart and not getting overly complicated or overcommitted from day one when there are still many unknowns, there is no doubt that establishing an operation in a foreign country by establishing a subsidiary brings with it a variety of benefits. The subsidiary is a separate legal entity with its own legal personality, even though it's wholly owned by the overseas parent company. So the parent company is not liable for the subsidiary's operations, debts, and liabilities. Many customers and suppliers prefer dealing with a local company rather than a branch, as it feels more permanent, although it would be incorrect to say that this is always the case. Equally, some companies find it easier to recruit senior level or key staff into a subsidiary, as it demonstrates a greater level of commitment to the market, as well as giving the feeling of being more permanent. We see many of our clients operate their foreign subs using cost-plus remuneration methodology, whereby the subsidiary performs certain functions on behalf of the parent company, which in turn covers the costs of its operations and gives them an uplift of, say, 3 or 5 or 7% on cost. And this arrangement is typically documented through a cost-plus agreement and substantiated through a benchmarking study. It has the benefit of enabling the company to maintain a controllable amount of profit in the overseas sub, on which a sort of road toll tax is paid. Now, I mentioned earlier that a branch can typically offset their loss against profits in the parent company, but losses in a subsidiary can only be relieved typically against future subsidiary profits. And from a compliance standpoint, obviously a subsidiary is a little bit more onerous because it does need to maintain its own accounting books and records, file a set of financial statements at year end together with a tax return. In some cases, it might even be subject to a local audit, but the documentation that is filed relates solely to the subsidiary and not to the parent company. So those 3 business registrations, sort of in sliding scale, go from the toe the water approach of the rep office through the branch or subsidiary. And often we see the decision is made around first market entry, go in with the rep office, craft an appropriately worded employment agreement so that it's consistent with the allowable activities. And once a company has determined that there is indeed an opportunity in the local market, then the decision to upgrade to branch or subsidiary is really the primary focus. And the decision around sub or branch obviously would depend on a variety of factors, not least of which would be taxation. But there are a couple of other approaches that I'm going to talk about very briefly before I hand over to Stuart. And you see on the slide here, we've got PEO and contractor. Now, the PEO, of course, we're very familiar here in the US with the idea of using a PEO, whereby an incorporated business passes their human capital to the PEO in order to take advantage of better healthcare benefits and HR management. But the international PEO model does work differently, as they don't require the company to establish an overseas business registration. They simply hire the employees themselves or through a third party, which may be a third party staffing firm with whom they have a relationship around the world. This business model is still in its infancy, but has seen quite rapid adoption amongst technology companies. It does seem immediately familiar and appears to be a quick start to international expansion. We would currently urge a bit of caution on the use of the international PEOs on the basis that it doesn't remove the potential for the employees to be deemed to be your employees, nor does it alleviate any potential tax nexus issues. It can be quite an expensive way of getting up and running despite being quick, with fees ranging from 10 to 30% of total compensation, including the employer's social charges and benefits. And contracts can be required to remain in place for a minimum of 2 years, denying you the flexibility of changing your approach to the market as your business needs change over time. So we would suggest that where the option of the rep office or non-resident employer exists, you should explore that alongside the PEO to better understand the pros and cons. I think there are certain countries around the world, such as maybe some African nations, Brazil, Russia, where some of the costs to set up and hire one single employee through a subsidiary are substantial, and a PEO may indeed be the preferred option. But I think most European Union countries and the main Asia Pacific countries, going direct does tend to be more cost effective and can be done very quickly too. Now, your most popular answer in the poll was the contractor, and that's fully understandable because it does indeed seem very easy to enter into an agreement with an individual, send them their money each month and make them responsible for their own compliance. And there's always this sort of feeling that they're overseas, they're a long way away, and as long as they're taking care of their compliance, then we are doing just fine here in the US. However, typically in our experience, we've seen that these relationships are not a relationship of independence, and therefore there is always potential for that contractor to be deemed to be an employee, and in turn, as a result of them being deemed to be an employee, to create tax nexus for the parent company. So whilst we wouldn't suggest that the contractor is completely outlawed, I think it needs to be done judiciously. I think an appropriate agreement needs to be put in place with an effort made to create independence between the two parties, and for it to be put in place for a relatively short term while you establish, similar to the rep office, while you establish really, is this the right person and is this the right market for us into which to expand?
Steve and Stuart, I do have a question from the audience that I'll ask, so thanks for letting me interrupt. And then I think once you answer that, if I can do another polling, that would be great. The question the question from the audience is, scaling from rep office to subsidiary seems practical. Can you downscale from subsidiary to rep office?
So that's a really good question, and I agree, it is very practical to scale up. Scaling down can, of course, be done, but I think it would be something that you would need to be able to justify a change in business conditions. So I don't think it would be appropriate to say, we've got a subsidiary that performs these functions, and it's got let's say, a headcount of half a dozen. Nothing has changed. We just want to downscale. However, if your business has changed dramatically and your headcount is reduced from, let's say, 6 to 2, and there has been a substantive change in your business, your local business, the way you carry out your business, such that the activities are now consistent with the rep office, I think it would be acceptable, but I think there could be an element of negotiation and some justification required in order to achieve it.
Excellent, thank you for that. So I'm going to launch the polling question so that we can give that to our audience. And the question is, what would give rise to automatic tax nexus in Germany? Hiring a contractor, leasing an office, shipping goods from US to a local customer, attending a Bayern Munich soccer game. So again, we'll give everyone a minute to answer. It sounds like this will be another one that they're going to learn about. Getting there with the votes again, audience, if you can do that quickly, we appreciate it. One more second and then I'll just share that. Okay. So the answers are hiring a contractor, 28%, 64% said leasing an office, 7% shipping goods from the US, 2% attending a soccer game. So there you go. And I believe, have another question. I'm just going to check and see if there is one there. If you would just, don't worry about it. Nothing to do with, just something to do with CPE. So go right ahead, back to your presentation. Thank you.
Fantastic, thank you very much indeed. And indeed, many of you were absolutely paying attention, and leasing an office in Germany would absolutely cross over that line and create tax nexus. It would be an expensive Bayern Munich soccer game that you would be attending, the 2% of you who would be paying corporate tax for that privilege. So thank you for that. Now, at this point, I'm actually going to hand over to Stuart Buglas. Stuart's going to take you through the key HR considerations, how to ensure you avoid making mistakes with these international hires, and also take a look at some of the current hot issues and how they are impacting companies operating global. Stuart.
Hi guys, thank you Steve. So delighted to be attending. today's webinar, I'm presenting to you some of the HR factors that obviously need to be taken into account when you are expanding globally. So if we can go to the next slide. And again, thank you. So essentially, how I'm going to present this is, over the years, I've basically advised clients on a number of issues with regards to their employment in international locations. And what comes about regularly are similar or same issues at different stages of the employee life cycle. So essentially, what I'm going to be presenting are checklists of areas at each stage of that life cycle and areas that you can focus on to make sure that critical points aren't overlooked, and things that possibly are overlooked could cost you dearly. So what we're going to be doing is we're going to be covering pre-hire. I'll be running through checklists of the items that I think should be on your agenda when you're considering employing in a particular country. We'll move on then to the checklist for when you do hire, i.e. when you make that offer to an individual, and also post-hire, all of the factors that I think are important to you from an HR perspective when you've got an existing workforce in a particular country. So let's make a start on pre-hire. So essentially, you are determining a new location to go to market, and obviously you've got a product that needs to be sold and you're pushing out into a new international location. I think critical to that stage of your expansion is to understand what will be the employment costs in that particular country. And you probably will expand into a country with a small headcount. It may even just be one individual. So it's critical to actually understand what the employment costs are, because let's face it, the employment costs are probably going to be your main expense. Stephen's just talked about the fact that you can have payroll registrations, you can have representative offices. So the cost of doing business can be reduced considerably. So you're not paying corporate taxes, you're not doing statutory accounts. So therefore your compliance can be pretty low cost. And therefore it is the case that your employment costs can be your number one cost in that location. So salary is the big one. So obviously you've got a figure in mind. You may be talking to employment agencies and recruitment agencies with regards to a going rate for a particular type of employee. However, what's often overlooked is the fact that your basic salary or the compensation that you're going to pay to an individual is just one part of the story, and social security costs can be a massive uplift to your costs. So the thing to look for in social security is you've got your headline percentage, but very often it's not just looking at the headline percentage. You also need to look at whether that's applied to capped earnings or uncapped earnings. So for example, if you're operating in the Czech Republic, say, you would have a 35% social security rate applied to salaries, but that is applied to a capped earnings. So if you had a really highly paid individual, you would only pay social security at 35% on the first 50,000 USD of earnings. Anything beyond that, and you wouldn't have a social security charge. Contrast that to France, where you've got a 45% employer social security contribution, and that's on uncapped earnings. So if you had somebody, say, on over $200,000 per annum as a total comp, then essentially you would be paying in the range of around 100,000 USD in employer social security charges on top of that salary. So it's a considerable point that you need to understand prior to choosing a location or prior to actually agreeing budgets. Coupled to that is benefits. So there's two different types of benefits, and when I talk to a client, I'll always make sure that they understand what is mandatory and what is market rate. So when it comes to mandatory, there's a lot of pseudo social security benefits that you may think in a particular country's got a really low social security rate and therefore it's a great location. But to be honest, a lot of the elements that are mandatory, such as in Hong Kong, you've got the mandatory provident fund. In Singapore, you've got the central provident fund. They are essentially just elements of social security by another name. So it really does pay to understand the social security landscape and to determine whether there's additional areas that essentially are pseudo social security. On top of that, though, many countries do have mandatory benefits that actually sit on top of the social security. They're completely separate. If you look at the UK, then essentially we've got something called the auto enrolment pension scheme. So that's something that's mandatory. Contributions at the moment are 3% for the employer, 5% for the employee. Poland has just introduced their auto enrolment scheme, which will be affecting employers with just over 20 employees starting in January next year, and that's going to be rolling out to all employers by 2021. So there's a trend that countries are basically passing the liabilities for their retired citizens onto employers to reduce the cost for the state. So pensions is something to look out for. The other element that's always important to look at is collective agreements. A lot of our clients will go into countries where there's a mandatory collective agreement. So what we mean by that is an agreement often agreed at a sector level, which covers all employers in that particular sector. So if you're in a manufacturing sector or a trade sector, pharmaceuticals, anything of a particular type of form of business, in countries such as France, Italy, Spain, there will be a collective agreement that applies to your particular type of industry. And that basically sits on top of the federal laws, and it has the impact of inflating employment terms, but also it provides employees with mandatory benefits as well. So you may have heard in France of prévoyance and mutuelle schemes, and in Italy, there's additional retirement schemes as well. So the other aspect of benefits are the must-haves. So they're not mandatory. So if you did a search on Google, they wouldn't come up on a search, but if you spoke to a candidate, then it would definitely be at the top of their agenda. So when it comes to budgeting, knowing what is market rate is essential. And I've put the example down there of Sweden. So in Sweden, there's a pension scheme called the ITP scheme, and it actually applies to employers who are members of collective agreements. Now, because the membership of collective agreements in Sweden isn't mandatory, a lot of our clients will actually operate in Sweden without the collective agreement applying to them, which is good news. The bad news is that every candidate who goes to an interview with our clients has an expectation that they will get a pension that is equivalent to the ITP scheme. And it's got some eye-watering employer contribution requirements, namely a 30% employer contribution on earnings beyond circa 50,000 USD. So if you've got somebody who again is a high earner, then in addition to the social security costs, you'll also have a pension contribution of 30% of their wage year on year. Additional benefits that are worth noting are Japan, France, and the Netherlands. There's a prevalence and expectation for commuting allowances. In most countries where you've got a sales employee or a professional or managerial employee, there's an expectation to be provided with a company car or a car allowance. So that needs to be factored. And again, healthcare, long-term disability, life policies. At that level of employment, the professional or the managerial level employee, there's an expectation of that type of package in most countries. It's rare nowadays not to have that expectation pushed to you by a candidate at interview. But it's worth noting that where you've got countries where there's a very strong national health scheme, you may be able to reduce your costs by just having top-up schemes. So it can be a mistake to actually go all out and get a full medical scheme at a cost of say 5-6K a year, when all that's required is a top-up scheme, which would be 1/10 of that cost. So that's worth noting as well. So pre-hire, what I would say is, in addition to benefits and social security, the headline terms that you need to budget for are annual leave. So again, a Google search would suggest that across most of Europe, you've got the EU Working Time Directive, and that dictates that everyone should get 20 days annual leave per year. But to be honest, it's 25 days, that is market rate. So again, when you're talking to candidates, 20 days doesn't always appeal to them. If you want to be competitive, then essentially you should be pitching at around 25 days. What's interesting on annual leave, and it's a point to note for anyone who's going to make and package an offer to an individual, is what you start out with may not be what you actually have in terms of annual leave after a couple of years. So what I mean by that is many countries will have a staggered statutory rate of annual leave. So in Japan, for example, you'll start on 10 days per annum, and that increases incrementally to the point at 6 years of service, the individual will have doubled their annual leave allowance to 20 days. So it always pays to ask the question, do you have a staggered accrual of mandatory annual leave? Additionally, never forget the fact that there's public holidays that need to be paid for as well. So Japan has 16 government dictated public holidays, so you would have to factor that in as well. On the checklist for terms, I would also put mandatory bonuses down. You may have obviously commissions and bonuses that you pay to employees based upon performance, but you also need to factor in there's certain countries where there'll be a mandatory bonus paid to employees through collective agreements or through statutory regulations. So Brazil, Netherlands and France are countries where you need to be aware of that. And Stephen had touched upon in his presentation the 13th and 14th month pay. That is a factor in a lot of countries. So again, if you're going to go into a country, it's a question that needs to be asked. Is there a 13th or 14th month pay? That needs to be considered. Mandatory profit share is something that's peculiar to Mexico. It's worth factoring that in if you're going to be doing a comp benefits profile for a candidate in Mexico. And sick pay is something that needs to be factored as well, just in case you do have an absent employee. In countries such as the Netherlands, you would have a continuing liability for salaries for 104 weeks of sickness. So the other point to note is it's not always about your entry costs. So in a lot of the countries that you go into, particularly at the outset where you've possibly just got one employee, you are testing the water. So to be aware of your exit costs is probably a prudent measure as well. So exit costs for me, if I was going to be advising a client on that, you'd want to know what your severance payments and accruals are. So Italy, Brazil and Spain have mandatory severance pay that's payable on termination. Notice periods are common to most countries outside of the US. So some of those notice periods are particularly large. So in Switzerland, most employees will have 3 months notice by statute. In Italy, senior employees will have as much as 6 months notice by statute. So it's something that isn't contractually negotiated. That is definitely owed to them on termination. You need to factor in if you've got a non-compete. In a lot of countries, for that to be valid, then it has to be paid at a rate of 50% of the average wage throughout the term of the non-compete. And then you've got the factor that all of that is just based upon statute. Beyond that, you've got the vagaries of unfair dismissal laws, and invariably in a lot of countries you need just cause to terminate, and you need to factor that into your termination costs as well. So if you move to the next slide.
And Stuart, before you go to the next slide, I do have a question from the audience, and then I think once you answer that, if I can launch another polling question, that'd be great. So the question from the audience is, what is included in annual leave? Vacation, sick, holidays, etc. What is included in annual leave?
Yeah, so it's a good question. So annual leave is essentially an interchangeable term with vacation or holiday. So essentially, it doesn't cover sick leave. So in most countries, sick leave is completely separate, and annual leave is essentially, it's the leave that is granted to an individual when they go on holiday. And as I say, it's an interchangeable term. Often it's referred to as vacation or holiday in certain countries, but it definitely doesn't include sick pay. That is completely separate.
Thank you. And now I'll launch our third polling question, and that is, what is the market rate for vacation entitlement in Europe? Is it 15 days, 20 days, 25, or 30? We'll just give them a couple of seconds and I'll give it back to you as soon as I read out what they say. Okay, and now I'm going to close it and share that with everyone. So no one said 15, 9% said 20, 75% 25, and 16% 30. How well were they listening?
Yeah, very good. It is 25 days, so pat on the back to all those that went for 25. So we are on the next stage of budgeting for your pre-hire. So we've gone through all of the costs, the headline costs, basically social security, etc. But you're moving on now to candidates, and whether on the point of hiring, whether there's factors that need to be considered with regards to the hire process. And I've listed the main ones here. So data protection is a huge issue now. We've all heard of GDPR, the EU's data privacy legislation that does its utmost to protect the personal data of individuals and puts a lot of focus on the companies that are actually processing that data. So it doesn't just apply to employees though, it applies to data subjects. So if you're basically collecting personal data through recruitment or selection processes, then essentially at the point you collect that data, you need to be giving candidates a privacy statement, basically outlining what you're going to be doing with that data, how long you're going to be retaining it for, who you're sharing it with. So all of that needs to be considered at the point of recruitment. The next thing to consider is when you are in talks with candidates is the right to work. So with a globally mobile workforce, we're coming across this time and time again where individuals who go for interview aren't actually local. So they're not citizens of the country in which you're advertising. And they will come to the interview and they will tell you that they've got a visa, which allows them to actually work. The difficulty with this is 9 times out of 10, that visa isn't capable of being transferred to the new employer. So you have to sponsor them with a new work permit, and therefore you need to factor that. So the fact that they've already got a visa doesn't mean an awful lot if you've got to apply, and it could take 3 months for you to do so in order to secure a new work permit. The other point to note is when you're dealing with candidates, there's a prevalence in the US to do background checks. When we're talking to clients, I've often got to explain there's limitations to that. So in a lot of countries, only the individual can apply for and receive a criminal background check. You can't do that for them. And also in a lot of countries such as France, you actually can't approach previous employers and ask information with regards to testing, obviously, their previous job records. So there's certain areas that you're just off radar and you can't actually do what you potentially can do in the US. So that's a factor. Steve's touched upon timing with regards to how you set things up, and representative offices and payroll registrations can be really quick. However, you've still got to factor in whether the individual is serving notice or has to serve notice with their previous employer. That can add between 1 and 3 months in a lot of countries to your timeframes. And also the fact that In a lot of countries, you can't actually hire an individual before you've got your registration in place. So Spain is a really high profile example of that. You've got to have your social security registration in place. You can't backdate the payroll. So you need to basically have a calendar and ensure that all of your contingencies are mapped out. And in some countries, you also need to factor into that calendar the fact that you need to have a pre-employment medical. Next slide. So now we're at the stage where you're going to make an offer to an individual, and there's a number of factors that I've put down for our checklist at this stage. So very often clients will say to us, well, look, under local contract rules, all contracts are meant to be valid. I've read that. Is that the case? Actually, it is the case, but a corollary to that is the fact that you need to have written particulars of employment issued to individuals within a certain time frame. So it's not particularly a contract of employment, but it's a written statement detailing all of the particulars such as holiday, termination rights, probationary periods, etc. So essentially, it serves the purpose of a contract of employment. So you do need to do something in writing, and if you've got to provide employment particulars in writing, then you may as well do that from the outset in an employment contract. So what format considerations are there with regards to that employment contract? Well, one of the key items that we come across is there's an expectation of candidates to have it in local language. However, having said that, not many countries actually dictate that it's got to be in the local language. France is one of them, Spain another, Belgium is another. Countries like Germany and Japan, it is prevalent to provide it in local language, but it's not a statutory requirement. So where we advise clients, we say, well, look, if you're comfortable doing it in English, then there's no statutory requirement to do it in local language, therefore negotiate in English. The other point that comes up quite a lot is choice of law. So a lot of our clients are US, they feel comfortable with California and New York law. Can they do that? Yes, they can. So there's no issue with actually the parties agreeing to a choice of law, and it could be New York, it could be California law that's applied. But what I would say is under local employment laws, the mandatory standards, the minimum standards have to be applied. So you can't deny an individual those mandatory minimum standards through a choice of law clause. So if you do apply a choice of law clause, there's an issue here because the individual could then have the best of both worlds and cherry pick between the two. So we would avoid that. Collective agreements, we've already touched upon. So in a lot of countries, there are mandatory collective agreements that apply. You need to be cognizant of what the terms are because those terms will be in addition to federal labour law. I've put down pro-employer clauses because there are some platitudes and flexibility with regards to how you can write your contractual clauses to make sure that you strengthen your position as the employer. So can you actually make a statement that the 13th month salary is included in the annual salary? Yes, you can. Is it the fact that a payment in lieu of notice on termination can just be calculated on basic salary only? You can do that as well. Is it the case that you can deny an individual overtime payments if they're a certain grade, or if you describe their employment duties in a certain way? Yes, you can. So there are flexible clauses that you can work on to make sure that your best possible position is protected as an employer. Non-competes are an issue for a lot of our clients. If they've got sales employees, they want to commit them to a non-compete. The issue with that, and I've put down the example of Germany, which is a really good example. If you're doing a non-compete, it needs to be in the employment contract from the outset. Now, the issue with Germany is you also need 12 months notice to actually waive a non-compete, and you've got to pay the individual 50% of their salary during the course of the non-compete. If you get an employee who's not very effective at their job and you want to terminate them, you're basically stuck with that non-compete because obviously the 12-month waiver at the point of termination won't be enforceable. So there are some considerations there, and it pays to check in each country what the rules are. IP, stock options, benefits, and home worker. The one that I'm going to draw upon here, because obviously I'm conscious of time, is stock options. The issue with stock options is the fact that when you've got the offer of stock options in the employment contract, it can be the case on termination that where there's been an unfair dismissal, it is included in the quantum of damages for that unfair dismissal. So if an individual's got unvested options at termination, a court could actually see the loss of value of those options as part of the damages for unfair dismissal. If you keep it separate to the employment contract, there's a better chance that that won't actually be considered as part of the termination quantum of damages. I've made a point here about home workers. So the issue with a lot of countries now, including Switzerland, which just in the last couple of months has actually followed this trend, is where you've got a home worker. In a lot of countries, there's a need to actually stipulate some element of expense that you're going to pay to them for the right to actually use their home for your purposes as an employer. So it's almost a rent that needs to be paid. You have to set that out in writing in the employment contract. The risk of not doing so is that the courts would assess what a reasonable charge would be to you, which can be a lot more than what you would stipulate in the contract. So if we go to the next slide.
And Stuart, before we do that, I have a question, and then I would like to do our last polling question as well, if that's okay with you.
Yep, no problem.
Great. So question from the audience is, can you explain the issues under assigning IP in inventions?
Yeah, so the issue with intellectual property in employment across a number of countries is the US style pre-invention assignment agreement. So you get an individual to sign as soon as they start employment to say that all of their inventions that they ever make during their employment will be owned by the employer. Those type of agreements aren't actually legal in a lot of countries. So you're not permitted to do that. However, having said that, in a lot of countries, there are statutory protections that you can rely upon in lieu of that contractual obligation. So it pays to understand what that statutory process is, because there are elements to it, such as the individual coming to you, disclosing what the invention is. You then have to follow a process to claim it. And if you do follow the process correctly, then statute is very often on your side. Without the pre-invention assignment agreement that you would have had in the US, statute actually does a pretty good job in most countries to protect you, but you have to follow the process.
Excellent, thank you. And now I'll launch the last poll, which is which country has an employer social security at the security rate of 45%? Is it UK, Netherlands, Germany, or France? Just give it a couple of seconds. And I'll close that now and share very quickly how many people were listening. 81% said France, 6% Germany, 11% Netherlands, 2% UK.
Very good. It's always France. So moving on to post-hire. So, and I am conscious of time, so I'll basically summarize some of the main points here. So the issue with having employees in a lot of countries is you should have a calendar or a timetable where you track certain events. So tracking their employment history, their service level can be important. So there's a number of points here with regards to performance management and termination. A lot of that comes down to how well you actually manage your timetable, because individuals will get unfair dismissal rights at certain times. So in the UK, at 104-week service, there's unfair dismissal rights. In Australia, it's at 6 months. So if you're tracking that, you can take an informed decision prior to meeting that threshold as to whether you want to terminate an employee or not. Likewise, in Germany, on the hire of your 11th employee, the individuals that you've got in your workforce will attain unfair dismissal rights. Again, tracking your headcount will help you make an informed decision, and it could seriously reduce the amount of your termination costs. With regards to absent management, there's factors that you need to consider with regards to that. So short-term or persistent absences are usually handled as a conduct issue. You need to be on top of that. You need to be asking for doctor's notes. If they're not forthcoming, then it's a matter of giving formal warnings. That is very much in contrast to the way that you would handle long-term absences. Long-term absences in most countries demand that you need to take a welfare approach to the issue. You need to get doctors' reports, and you need to make workplace adjustments if required. I've put down there the fact that you probably need to have policies, and it's a truism that in most countries you have a duty of care to your employees with regards to stress, with regards to harassment, bullying, etc. You can prove to a degree that you've taken a very good approach and have absolved some of your duty of care by just having policies that you can defend your position should you be in a court. Likewise, where there's a bribery or whistleblowing or money laundering issue, courts expect you as a reasonable employer to have policies in place. If you can prove that you've got a policy, a lot of courts will view that you've got a rogue employee as opposed to you being a bad employer. And that might absolve some of your liability with regards to a bribery claim under, say, any corruption laws, anti-bribery laws in a particular country. Working time and leave, it's a big issue because in the EU recently there's been a court case whereby the result of which you're going to have to track working time on a daily basis, the start and finish time of every single employee. The reason for that is you've got rest periods that need to be adhered to, a minimum of 11 hours per day, 36 hours in a week. And with regards to that, you've also got issues with regards to annual leave and how you manage that. There's a big trend, and again, it's been pushed across Europe through the European Court of Justice, that when you're paying for annual leave, you need to pay it at average earnings as opposed to basic salary. So your reference period is 12 months, and you're going to have to calculate what the average earnings are. Every time an individual takes a day's leave, then you need to pay them at average earnings. So these are the type of conversations that we're having with clients all of the time now. It's a moving playing field, and the courts are getting very granular on the type of strategies and the type of processes that you need to have to back up things like working time and leave. So next slide.
I do have two questions. I don't know if you want to sum up first, and we can certainly address those questions if the two people who have the questions want to stay on, or if everyone does.
Yeah. I mean, this last slide, I'll not go into any detail. It is just there as headings in the absence of time to actually delve into it. But the Me Too campaign, a load of countries are now onto that with regards to having statutory force behind workplace harassment. Contingent labour, dependent contractors, the gig economy, countries are beginning to listen, and they're beginning to put in place legislation that protects that type of contingent labour. Gender pay gap, that's something that statutory force is being reflected in a number of countries where employers have to report what that differential is between male and female employees. Relaxed immigration, particularly in countries like Germany, the working population is reducing significantly. There's about 1.2 million open positions in Germany. So they've basically relaxed a lot of the immigration rules. So you don't have to do a local labour market test. You don't have to advertise locally for for EU individuals. You can now apply directly to get a non-EU national work permit. So that's good news. An increased workplace flexibility is big news as well. So a lot of work is going on with the legislators in every country, and there's going to be increased statutory regulation around offering and agreeing to flexible work practices for individuals, part-time work, job shares, all of that good stuff. So I think that concludes the presentation, and apologies if I've rattled through that quickly. There was a lot of content, but it just leaves us with a couple of minutes to answer any more questions.
Yes, and if you don't mind, thank you so much. Yeah, and you are so right. There is just so much information. I know I've learned a lot and very surprised by some of it. So first question is, if I have an international subsidiary, can I manage them from a different subsidiary within the parent company, management, HR, payroll, etc.?
Yeah, you can. I mean, it touches upon what Steve alluded to in his presentation about permanent establishment. So the control of an employee in a local jurisdiction can generate issues with regards to permanent establishment risks for corporation tax for whichever company isn't the employer but does have control. So you can get into really complicated high risk corporate tax issues with regards to that. From an employment perspective, you really don't want your employer of record to be blurred. You really do need to have the control of the employee to be the employer of record. But by all accounts, I mean, parent companies do have an element of control. I think that's a given. With regards to data privacy considerations, are they a data controller? There may be a need for a privacy statement to be issued by a parent company as in addition to the local employing entity. So it's an expansive area, and I think it needs to be looked into in detail depending upon the scenario.
Thank you. And I know we're a minute after, so if you don't mind, there is just one more question, and it is, can you discuss how commission-based employment agreements are treated by different countries in Europe?
Yeah, it does. It touches upon this permanent establishment issue again. If you're trying to go into a country without generating a permanent establishment, if you have commissions, then that suggests that there's local sales activity. So invariably, you try to use non-PE language in your employment contracts, use terminology such as variable compensation instead of commission. With regards to commission only employment, an issue can be minimum wage requirements. So if you've got an individual who is only paid on results, then essentially you may have issues with regards to months where they don't actually get paid any commission. They wouldn't be paid the minimum wage for the time that they've spent. So it would be a breach of local regulations on that. So there's two major issues there with regards to commission only employment.
Again, Stuart and Steve, so much to know, and we really thank you for sharing your expertise, giving out your information. So many people have asked whether or not they could download the presentation. So of course you can download the presentation. It is right here that you can do that. So you can download it here, and of course we're making it available on our website. I know that you've received valuable and practicable information from both Stuart and Steve. So again, thank you so much. I invite our audience to reach out to both of you, and they can do that at their convenience. I'm sure that you'll help them with whatever questions they have. And with that, again, I'm just going to say thank you both so much for all that you shared today. And this does conclude our presentation on how to expand globally and avoid these common HR challenges. Thank you all, and have a great rest of your day.